Precious metals and platinum, silver. Also look at First Majestic and a couple of other points, maybe finish with a couple of other commodities, but this is a precious metals video. Meant to do this not this last weekend, the weekend before, because we were seeing stirrings in our community and premium area. We've been engaged in this for a while. I'm back in silver and platinum. So what are we looking at? Well, it seems like the processes are slowly finishing. So a couple of things. The overall corrective channel comes first. This is what we refer to as a point of needing to square up. We had a key level over here that was in and around the medical events of March 2020. We've covered that a couple of times, where there was eventually foundational support that came to the fore. Over there we talk about squaring up the process, where after a downward move stroke trend like you've got here, you eventually get to a point where you cease to go down, you break that trend. You can see the channel was broken, you get your return move to a little bit of post the euphoria of getting out of the range, and you end up with structure more like this. This is typical of phraseology that we use, that we create, because there's so much in technical analysis that is dogma, that's not accurate, and there's so many things that are as yet undefined. So we create definitions for them. It's almost a symmetricalization, a squaring up, a horizontalization of some form of structure that will accept the base that has been put under it, which was the 1680 level as we've illustrated in blue, and go ahead and then create a floor now for us to wind up, coil, and move to the upside again in the direction of the original macro upside direction that we had taken. That is this. This is your bull market. So that is what we mean when we talk about squaring up. It's that process that's occurred in the orange that I'm reiterating in the green, and that we feel is taking place in your God market, aka the gold. And we're going to cover the other metals as mentioned. So, but we want to finish gold. We've got to discuss gold, because gold needs to play. It needs to be it's one of the most important elements of this. So when you have a look at this as well, there was also a broadening structure. And no matter which technical framing you take, that's kind of busy and messy in a sense. When you take our broadening structure, which you can only learn at the Market Sniper website, go book a call, real theory of how really efficiently to use charting to benefit you instead of chasing cars, which is FOMO, dog style, chasing R's for your maximal rewards with restricted and limited losses trades, RRR. So that too in of itself is a descending megaphone. It's structure that we've created. It's technical analysis theory that we've created that is implying a continuation to the upside, because it is descending on a bullish pole. So what do you get? We're at that key level there where you're actually looking out, and in terms of what we refer to as a slide as well, when it's bigger and larger, is in fact a breakout of what is a macro continuation. So that is gold, no matter how you frame it, and I've given you two versions of it. Technically you should be coming to the same conclusions. So let's drop into a lower time frame. We'll bring in some of the details and some of the key levels. So there was the big blue. We'll highlight it in green. There, and there. And then on the other side, we've covered this many times. So flag like over there, sitting on top as support, and then going for the blow off. Then double bottom, as we've covered before, support, and then the spike where you couldn't stay down for too long, right into there, which brings us into this interesting melee of lines that will look confusing at first. Let's drop into it and we'll clarify further as we do. So what happened? Let's have a little look at what happened. So we appeared in a couple of shows. We warned again, as I say, that there was a couple of final spills that need to happen during these broadening structures that were occurring here. In the end, you ended up with a bit of a head and shoulder. It wasn't a popular position to be, where everyone is waiting for the bull market to come, but you've got to call it as you see it, and that's pretty much our game. Don't draw or look for that what you want. Look for what is there. Clear First of all, you pivot around the neckline area as you did here. That was almost like a continuation pattern for the up move. Then you support on it once you've claimed the level. That is the last touch on the neckline. We call it armpit 1. You've got to shrink, wrap that head like a serial killer putting the bag over all your favorite frenemies in your freezer. Yes, keep that thought in mind while you draw this head and come back down. Armpit 2 over there. The first visit, so the last when you depart for the head and the first return, armpits 1 and 2, and that gives you your broadening structure that occurred over here. It's got a bit misaligned. I think I needed to pivot into the log scale for them to be marrying up, but that is your head and shoulder, that is your break, that is your broadening structure, that is the target make. Breaks and target make, so that was the downside that caused some people some angst. But that was pretty much coming to the last of the last. You didn't run the 1712 or the 1680 this time. And in fact, you've been showing a reversal structure. That's what I'm showing you in the blue neckline there. That is a head. And of course, that creates a target. Oh, guess what? You sold a high. Fancy that. With HVF method, without trying and aiming for highs, you end up selling highs because you are utilizing targets, natural geometry created in the technical analysis, not some RSI, not some stochastic, not some MACD crossover mechanism of mathematical data crunching that's supposed to have clairvoyant indications. This is showing you what the nature of people are doing, and most of the institutional players come up and show up and trade every day with the same size, the same leverage. They aren't changing. So the degree that they get hit to the downside is the degree to which they can show strength to the upside as well. So there's a natural geometry to that. We went into the rising wedge that I'm highlighting here. You fell out of it into, again, a broadening structure, a bit skittish. As you can see, again, on a bull pole, you're going up. So what does it mean? Oh, wait, your break of your capping descending grind line, that's that top line across that megaphone, gives you the 1800 mark. It's also the break of the 1800 mark. It's also the confluence of the other neckline that we will refer to as well, just at the 1801 level. So that's coming a real cluster of levels, key round number, and the target, of course, of the first and smaller, which we refer to as a monarch. It's the first. There's no such name that you will find anywhere on the internet because it's our theory to describe the very first, the top, the king dog, the smallest of head and shoulders that is nestled in the head. That is the beginning of the move to the upside. I would argue that in this case, it's not textbook because there's a lower point here. The best head and shoulders are at absolute lows and absolute highs, but this is a very deep relative low and very close to previous other lows, and for this structure and time frame under review, that's a reasonable comment. So that break point is and was critical. Also in that, you might have a small shoulder and a very complex head here, which has got a lot of nestled stuff, and we've got a test and a retest. Sometimes you get that complexity even on a smaller scale. You can see coming back to the neckline, coming back to the neckline, coming back to the neckline, and then going over and then only letting go. So you've got a bit more complexity in this right shoulder, but this could again be a neckline break on a larger reversal. But this is as I've already highlighted, not textbook because there's not an absolute low. There we have had other lows here, and we are also we've been squaring up with a flat bottom base floor at that 1680. So it's not I wouldn't say it's perfect rendition of the final capitulation absolute lows in long cyclicals, but in terms of this correction, it is certainly giving us inverted head and shoulder reversal structure on multiple time frames. What has happened here? Well, it's probed through that slide stroke capping descending grind line of the descending megaphone out there. It's popped out. That is a beginning, and that's the first time, apart from a very short shimmy earlier on, quite a lot earlier on in this corrective phase. So this is very bullish territory for the God market. Let's take a move straight over to the gold-silver ratio. Gold-silver ratio. What's been going on there? Well, gold has been a little bit of a boss today, but in actual fact, if you look at this on the gold-silver ratio, you will see again head and shoulder here. Remember, we want this to go down, so bearish is good for precious metals. Target made. You just got out and bought back the temporary localized low. Isn't that convenient? Major bear pole and an ascending structure, which is going to mean downside continuation in a broadening. So you smashed and broke it and you're doing a return move, but overall this should continue to the downside. Something else you could possibly notice in all of this, let's put 8 hour on, is that you actually have a larger potential head and shoulder. Guess where your neckline is. You guessed it, on that target, which is giving you armpit 1 and armpit 2, the last known logical. And only HVF method uses purely price horizontal neck lines. That is because price dominates everything. You don't have these sloping lines at declining or ascending, and people start drawing some of the most ridiculous things. I've seen people draw something like that with a ascending neckline. Gets absolutely stupid. Price determines everything. Key levels of significance should just be run. What is the most logical round number that comes to mind on this blue level? I would say you're in and around the 73.50 for this neckline. I've drawn it for shorthand purposes right by that target, because that is a key level of significance, and what's been proven to be a key level of significance before is relevant and will likely be a gain. So that in of itself, if it were to come down, would bring us to 66, all the sixes, I'm guessing. Yep, you guessed it, all the way back down there for a break of the 70 level. Don't forget, we came from 128 and we fell so hard so fast in the bull market. That's why we've had a congestion period that's rather lengthy in this channel. In fact, we thought we'd fall out the bottom of this orange channel at this juncture and come on down, but actually we popped out the top and we've now done that structure. So that's where we are in the gold silver ratio, and we expect downside. We expect downside despite this return move to the basing ascending grind line of that ascending megaphone on a bear pole. So that is overall bullish for gold. The fact that we are becoming more bearish on the gold silver ratio, but the favored market for me is indeed the silver. Let's take a look at yours truly, the queen of the precious metals markets, namely the silver. Now that looks like an interesting draw, but before we do that, let's take the eye off and save you all that detail and go back to the macro and just remind you of a couple of things that need to be remembered. A 28 level, for example, very, very important level. You see that notification. It was in essence the floor of that descending triangle. That was the end of the bear market. Note, key level, just run. Multiple attempts to break that was supported until it spilt, and it was all the way down. There's your COVID sell-off that actually gave you the bargain basement price of just north of 11.6 in the end. Now you can see how many times we've sold out here. This is the arrowhead. We need resistance, showing up and battering once, twice, 3 times a lady, and we cross the line as a transgender person at some later point at the 28. Let's go back into this and have a little look on a smaller level to capture some of that detail of what we said and how it will go. So let's go daily. Let's go to maybe 12 hours. 12 hours to get that zone in properly. Let's also get bit more real estate so we can shoe it all in. So now I'm going to put the eye back in and you'll understand falling wedge, gray and red line, the break of the falling wedge and a return move over there. Now what's all these drawings that are going on over here? Well, this is once again your masterclass on inverted head and shoulders. Note how the actual support of the orange box always just run, flush out the technical stops and hand them a loss. So here you have a monarch. Inverted head and shoulders right here in this section. I'm going to go with a blue pen and a fat and draw because we're here in pink. Left shoulder, this is the neckline. This is the final capitulation that actually saw you dip outside the falling wedge. Then this complexity here, you can see the armpits there and there, and note the break level over there. That was also support for that neckline. If you continue over here, these areas supported, break it with momentum, rally back up, armpit 1, head, shrink wrap him into the first touch of the head. You've got him. You've got your enemy in the freezer with his glazed over face in the plastic bag. Look at that. Look at that. Oh, you're selling the high again. Oh, come on. There's got to be a coincidence. Selling the high again into a falling wedge. What are you getting? Another head and shoulders, which will show you on a lower time frame, which is there, which is giving you that 25.16 as a potential target. Yes, sir. Broadening structure all the way there into a down leg. It pointed to another spill. Those spills are now done. Rally, target made. Look at the shooting star also, and giving you the possibility again of another form of structure. That's what we're highlighting here now. Again, support, broken with momentum. You died just at it. You shooting star just through it. That was the top on the target make. Cluster of levels here. Target make, shooting star, new neckline make, all just shy of and bulking at the $25 mark. What are we calling? Next move up here. We were in. So not last weekend, the weekend before. I wanted to talk to you guys, but I just didn't get the time. Catching up since my away break. Behind on everything. You know how it goes. So you're hearing late. If you want to get it on time and you want to get it earlier, it's time to be in the community and hear it as it comes out of the horse's mouth. Yep, that would be me. Anyway, left shoulder, head, and right shoulder. Oh, wait, you're getting even on these smaller, higher highs and higher lows, you're getting monarchs. What is this? What is this, he says. You see it? You see it right there? Do you see it right there? Do you want to see it on a lower time frame? Why not? Let's show you how it works, because it looks a little bit blocky at that level. Let's take you into the hourly and show it to you beautifully after we rub all those suspect little drawings off. Yes, indeed. So there it is, 22, around about this 23, my apologies, around about the 23.60, 62 level. There it is, little schizo up and downer, and there was your final head, and again you're up. What happened here? Again a target make, and now you came back and you kissed the neckline. Kissing the neckline, a little bit of a pullback. It was looking good for precious metals today. It was looking good for silver today. But what's ended up happening? A pushback. There you go, 1, 2, 3 and 4. That's your draw. Where does that take you? This is going to bring you to the eventual story where I'm taking you on silver. Yes, indeed. Up you go. You go to 25. That's a good little move up. That'll take you to your next targeting level. But where does all of this end? Where does all of it end? Well, if it's a reversal and it's what we think we are, what about that bigger pattern that we were flashing to you? Let's go up to the 8 hour. Let's see if we can squeeze it in on that time frame. Here we go. So this is the big one in red. This is the big neckline. This is all the way to the final spill low. That was one of the lowest points for silver. Whoops, there she goes. Right the way through the 28 level. That same level I showed you. The floor of the descending triangle. And the once, twice, 3 times a lady. You cross the line as a transgender and you're going to be home Jerome. You won't be Jerome anymore. You'll be, who knows, Jane, I don't know, something else. But nonetheless, you are going to have picked off a great risk reward if of course you'd got in with us in and around here. But for you who might be manufacturing a trade, this revisit to the neckline is an opportunity. Where would you drag your stop down? You might try the right shoulder of that second little monarch that was in there, that's in there, on the basis that you shouldn't come lower. Or if you want to be super safe, you can drag it below this low here in the blue line of 23, key round number, and a neckline for the original low, which will certainly give you some level of protection depending on your risk profile. Watch and wait and expect the trade to run you through the 28. In other words, take the 28.1. At that point, I would suspect a little bit of a pullback, a little bit of a rest, some winding up, remember. But this time being the 4th time, once, twice, 3 times a lady, this time being the 4th time, whatever comes will be the thing that'll set you up and coil you up for a takeout to the upside. That's my call on silver for you. Yep, indeed. So things are recovering. So we did say it's coming, but it's not yet ready yet. Now we are saying the reversals are starting to happen. The structures, even over here in this earlier point, once, twice, there you go with a 3rd. There's your neckline. You can see you are starting to get these formations of rounding and inverted head and shoulder type structures. What about something like First Majestic, for example, an equity that we're in? Let's get down there. Let's have a look at him. How's he doing? And what is he doing? Let's just also remind people, some of you may not be new to the channel and you haven't seen stuff that we've done on this one before. So we should take you right up to weekly is probably better. Weekly, maybe more. We need 2 weeks. See if we can squeeze it all in on 2 weeks. Monthly is a bit extreme. We're on a log scale. So we're actually calling. Let's get that into reg so that we can show you that a little bit more nicely. There you go. A lot of manipulation of the charts. Falling wedge break, big push up. That's our second impulse, but it came back down hard, suddenly and fast. That's all a second impulse into there. Then a rush third over there. That's a break. This actually ran our second interim. You need to be on the lower time frames to see it, because it was in pre-market that it happened. Then down, falling wedge, that saw you rebounds on the funnel. Plenty of time to make it. That's your halfway mark over here. That will take you to March 25. Next year's 22. You've got time. You've got time, and you've got a target of 34.14 overall, and that's going to be with a greatly stronger silver. The miners will be boss. Miners will be boss. Yes, that's right. So with that in mind, let's have a little look on the lower time frame. There's that falling wedge. There's that kiss. You break the falling wedge. You have your small returning move, and you are inching your way up. Silver, despite this little dip, it's rallying back up now a little bit. It's going to be looking good, I think, personally, despite the dip. And First Majestic is holding on even more than silver, despite having quite a weak period during this trial. So a move out of falling wedges. There's that lower time frame. In fact, it's not, it's daily. Let's take it into 12 hours or 18 hours even, just slightly bigger. There you can see the wick running that second interim over there. That's why we stall back. It was a big stall back, a revisit to funnel. We've got to get to 34. We've got lots of time to do it. We need bullish. It's the inflation trade. It's the big long. It's the big long of all things. It's the fiat proliferation game. It is the Bolshevik communist agenda of making the extremely rich by creating inflation and impoverishing everybody else who doesn't own the same percentage of assets in real things or equity or income producing things that are currently in existence. So all very good. First Majestic Corp starting to find a little bit of spine. What about that platinum? Let's go straight to platinum. So platinum, again, as a reminder, the big picture was falling wedge into a break. May need, again, 2 weeks to get the full picture on that one. There you go. Big up. Platinum always, I say always, generally had a higher value than gold. That's how you blow off. That's how a trend ends. You blow off. Then you got smashed down. This is a corrective period where it's all about the bonds, buy the bonds, and the financialization of everything. Major capitulation that went with, you guessed it, that medical event that may not be named, all the way down to there. That was your final capitulation. We've called it across everything. We called it a book-ending event for the likes of the bond market, for them to go down in value and yields to go up, and for bull markets to reassert again after what is essentially a downward gradient on the splitter for loss of value in platinum and many precious metals as well. This is a break. You then got your return move. That return move was in the form of a falling wedge again, 3 impulse falling wedge with a little spiller out the bottom, type 2. You got your inverted head and shoulders again there, and then a little one there and a wind up on your neckline. We're looking for initially 1161 on all of that. We got in at 900s. We got in at 900s on the head here. I was quite early. That was physical. There was also, you can also take leverage trades. Of course, on this we have a broker's link below for Scandinavian Capital Markets for trading up to 100x leverage, yet you're in a European destination, Sweden, stable, well run. By the way, below, buying physical through pure gold, absolutely, platinum, gold, and silver. Support our suppliers if you want to support the channel. We appreciate that. That's kind if you do. Of course, no one cares or checks if you don't. You're welcome to do whatever you like. We appreciate your support, however. On top of that, you also have Bullion Vault, where you can have internet gold, physical gold, and I would convert, as I always say, internet gold into more physical as we get more cranky, more weird into this great reset. So that which you hold is strongest. But for those of you that don't want want to think about where to put it right now, Bullion Vault will serve you very, very well. And you buy, bid, ask, everything, and it's held for you. You can even have numbered bars that are reserved and held for you in Singapore or other nation states apart from the one that you live in, for governmental overreach and ne'er-do-wells, as they say, those that will seek to steal and extract. Indeed, lots of them around. So that overall is the platinum scenario. Could come a little bit off, a little bit first, and wind up. It seems to want to play and dance on the key level. That's at 1030. That's $1,030 for you. By the way, platinum, far more rare than gold. Far more rare than gold, selling for significantly less. People are going to look back at these times and go, how on earth did I not stockpile that white, shiny stuff? I can tell you that. That's my personal opinion. As rare silver ounces being pulled out at about 8 to a gold ounce. Platinum, man, oh man, you just, if there's 2 or 3 gold Olympic swimming pools, I would hate to know what percentage of a single Olympic swimming pool you could fit with all the platinum in the world. Truly, it's not a great deal. Anyway, so a little bit of a finishing flurry for you. We are talking to you around energies as well. So we've been bullish all the way. We've had a great trade in oil. We got out when that was inflation was getting a little bit hot, and when Biden was going to start talking to the Arabs and OPEC. Invariably, they're going to take a little bit of the energy out of that particular market. For example, in natural gas, you can see it's losing a little bit of its shine, but that is off a huge move. This will reassert. You'll have a pullback, and then it'll go again. It'll take out this high. This is a secular trend for upside. There'll be little news-based events where they do a tip-tap-toe and seem to do minor somethings for a while, but that is not going to stop the tide of what is coming. And if we take a look at the WTI, let's remind you on this one. WTI. Yep, so WTI, big falling wedge. Again, a blow off, which was the end of the bull market. Let's get a little bit more of it in for you. So you can see the bull market, there you go. Could have had it for $11 and you then got it all the way to 147. You think cryptos move a lot, 11 to 147. How about that? That's over 100 times. Then this big rally, the first inverted. We called that and that smackdown. We called that and that smackdown. Called for single digits. Off the stage, in speaking publicly, we went and said crazy shit. We said on SA Crypto that oil would trade in single digits. That was people were not pricing this risk anywhere near as much as they should. And further to which, we said it in Acapulco in February, we said it in December in KwaZulu-Natal on that stage, and we said it again in February, before any of the news about what was being planned or wasn't being planned that was about to befall us occurred. So down this break, this is a big rally. Not only are we saying you'll take out that high, which you've now taken out, you'll take out the previous funnel level range where you sold off. That's already happened. You're going to take out this range, which is the $100 mark. You'll be in triple digits again. You will also take out the all-time high, and you will take out 200 and go for 250. This is going to be the great inflation, my friends. That's not happening tomorrow. You can see how these things happen. They don't go up in straight lines, but they will keep coming and keep coming and keep coming. And it'll be as much about the fiat value as it will be about the commodity. These are inflationary times. And that is the greatest way to maximize the wealth for the billionaire class, is get them all into assets with cheap borrowed debt that they pay next to no interest on crappy fiat currencies that will be near to worthless, and they swap them for real assets or real companies that generate dividends and earnings, or real physical assets that will appreciate. And guess what? You borrow at 30% on your credit card, 26%, 16% if you're lucky, 11 or 9% on your credit card. You pay compound interest to banking cartel that is slowly dying. That's it. So that's the energies narrative. This is resting, but it ain't over. It ain't over by even a smidge. This is also going to go higher, but we expect pullback. Will this level hold here? We don't know. Will it hold and go a little deeper like it did here? Or are we just going to have a short one and square up quite quickly? Time will tell. Time will tell on the energies. But the big story and the main message I wanted to give you is the precious metals are coming back. That doesn't mean Right now, you're going to have moon spike a la crypto. It means you want to watch for those successions of higher highs, higher lows, and you want to buy dips. Now is a good time to buy dips. Buying dips in a bear market means you get more opportunities to buy even more and even deeper dips that keep going down, and you keep getting negative enforcement for your indulgence. Yes, you can zero cost average at an investment level and keep drip feeding in. That's all very fine and good. But now is the time where actually it's going to be a net accumulation market, and then should be a series of higher highs and higher lows overall for an extended period until reset is out. And by the way, order the physical. Use pure gold as well, because if you don't hold it, you don't own it. And like they say in Bitcoin, not my keys, not my coins. You've got to own it, because I actually assess that they will eventually stop people from buying precious metals. They'll make it illegal and make it hard. They'll make you have to have a license. They'll do various things until they eventually cancel it altogether. So they'll slowly squeeze you out. And then they'll ask at a later date, just like they keep creeping in, this medical event, how more and more is being expected to you, just 2 weeks to flatten the curve, etc., etc., etc. Now to you can't move unless you are double vaccinated, etc., etc. All these fascinating things. Well, that's what's going to happen with precious metals, till eventually it may even become illegal to own. May even become illegal to own. You want to be holding it physically, regardless of whether that outcome happens or not. Okay, that's it from me. Thank you for checking in. You've had your precious metals update. You had a small run past the commodities. We also did give you coffee. There's one or two other commodities just to finish I'll remind you of, as it's been a while since we chatted. Robusta coffee, we gave you this inverted head and shoulders over here, and this move onwards and upwards and upwards and upwards and upwards, made its target, had a little shakeout, continued in the channel chain. If you think that it's all because of climate change, because of supply chain, that the oil is getting expensive, that the coffee is getting expensive, because everything is getting expensive, and not because of the fact that they created unbelievable amount, 25% of the total amount of dollars ever created in a single year that was ever in existence. And let me tell you, the Eurozone is doing all these other things as well. The dollars were also exported offshore because all the countries needed it to buy their products. If you think this is all about a supply chain issue, and it's all about climate change because the forests in Brazil are burning. No, it's about fiat proliferation and a central banking cartel that are seeking to enrich the billionaire class at the expense of you and turning you into reliant UBI serfs in this global planet. And the way to protect yourself is to secure assets that have real value, that will appreciate. And this trade is the trade on gold, silver, and platinum. That'll be wrong for an extended period, and then suddenly very damn right. Remember, if you like what we do, you want to learn some of these techniques about trading, technical analysis, click on the link below that says themarketsniper.com. It's the only way to engage us. Have a sense of humor, own your own outcomes, and you're welcome. We'll check that you're not entirely mad and that you do want to build your wealth. So I'm afraid we can't take everyone, but assuming you're level-headed and you're ready to go ahead, it'll be a friendly discussion. We'll demonstrate that which we do, and you can start building wealth in these times. It's a choice between build wealth or absolute slavery and serfdom, and I'd rather be on the wealthy end of the slave spectrum, going into what's coming with a draconian governmental overreach that is being perpetuated against us. Thanks so much for watching. We appreciate it. My apologies, this is take 2 following a big audio cock up on my behalf. We appreciate shares, likes, and we'll catch you next time. Thank you for watching. All the best and goodbye.